Hey, how's it going, guys? I'm back again. Wanted to discuss a few things with you. Again, this is Andrew with Wealth Investors Network. And today we wanted to talk about the most important, what I consider at least, to be probably pound for pound, the most important part of our process. And by process, what I'm referring to is acquiring properties for the sole purpose of increasing the return on investment for our partners. And even more importantly, I think, than acquiring the properties is having a back end strategy for what you're going to do with the property once you acquire it. I mean, after all, it makes no sense to buy a property, to get a property under contract, and you have absolutely no idea what you're going to do with it. That's called a non-performing asset. And we're not in the business of just getting properties and letting them sit in inventory. No. When we acquire properties, we're interested in monetizing those properties. That's the only reason that we buy properties, is to make money off of them. This is an investment. So you wouldn't buy stocks or bonds and not make any money off of them, or lose money, worse yet. Well, as far as I'm concerned, if you've got an empty or vacant house that's not being occupied, it's not generating revenue, you're losing money, because that money that's placed in that non-performing asset could be easily placed in something else and gaining a healthy return on investment. So first things first, we got to make sure that any property that we buy, we understand what we're going to do with that property to monetize it, make money off of it, make our investors profits from that property. And so the reason why I say that this is probably pound for pound the most important part, even more important than acquiring the property, is for that very reason. Because at the end of the day, this is business. And business requires profits. And that's exactly what we want to do with every single property that we get in-house, in inventory. We want to turn it and make a profit. And the only way that we can do that, quite frankly, is to work with our buyers on the back end. So who are our buyers? That's an important distinction, because depending on the strategy, depending on the deal, and even for that part, depending on the location, depending on the asset, the property itself, the buyer profile is going to change. Typically, what we're looking for in our properties are going to be owner, occupant, tenant buyers. And that is two words. And it's probably a little bit different of a concept than what you guys, in a traditional real estate sense, have ever really been familiarized with. So, tenant, buyer. Now, what exactly is a tenant buyer? Well, tenant buyer is, first of all, a tenant. And second of all, a buyer. They are a tenant and a buyer. They are one and the same all together at the same time. And I'm going to try to break this concept down a little bit, just piece by piece, so that we can make this make sense for everybody that's viewing. A tenant buyer is a person that actually lives in a property as a tenant. They are a regular tenant, right? Just as if you're a landlord and you have someone that signs a lease agreement with you that wants to stay in the property for a specific period of time as designated in the lease agreement, that person is called a tenant. They don't necessarily own the property. Well, not necessarily. They just don't own the property. They are renting the property. The owner of the property is the landlord. That's a tenant. A buyer is someone that lives in the property and they are in the process of buying the property. They are not just living in the property for the sole purpose of renting the property. They are living in the property because they are really aspiring to own the property. They are aspiring to buy the property and own the asset for themselves. But until such a time that they can afford to pay the purchase price, the total purchase price for the property, they are going to be dwelling in the property as a tenant. So they are a tenant in the realistic sense of the word. They are a buyer in an idealistic sense of the word, because they don't have all of the funds yet to buy the property. So they are renting to own the property. They are renting for the time being, with the understanding that eventually when they get to a certain point, they either qualify for a loan and they pay off, the purchase price, or they establish some sort of payment plan, installment plan with the owner of the property to buy the property outright. So that is a tenant buyer. And these by far are my favorite types of partners, if I can use that word. Usually when we use the word partners, we're talking about our partners that are investing with us, our investment partners, people that have money that want to purchase real estate, and they utilize our services to do that. They are our partners. You'll also hear me refer to tenant buyers as our partners, although I designate the term tenant buyers to differentiate between the investment partner versus the asset partner or the property partner. And the reason why I call them partners is because our view is a little bit different. It's slightly different from the traditional sense of real estate investing, because we're not really interested in having people that pay rent to us on a monthly basis, and then at some point in the future, they decide to move. And then you go through the same challenges that you have with a regular tenant, because they didn't keep the property clean a lot of times. Not everybody, of course, guys, come on. Not everybody, but a lot of people as tenants, they don't have that pride of ownership. They don't have that vested interest in the property because they're only staying there temporarily. So a lot of times when you get the property back, it requires a tremendous amount of cleaning because it wasn't cared for properly. Sometimes it needs repairs. And usually the way that we try to mitigate this with regular tenants, or the way that landlords, usually they try to check on the property to make sure that everything is looking good and the tenant is taking care of the property so that there are no surprises when the tenant moves out. And then on the other hand, before the tenant even moves in, the landlord charges a deposit, and that deposit is supposed to cover any of the fees necessary with the cleaning at the end of the lease term, or any type of incidental repairs that are necessary to release the property again and keep the money coming in. But what happens in the instance that you have a tenant who has no vested interest in the property, especially in the upkeep of it happens probably more than it should, but that's the very realistic side of being a landlord. And frankly, I've been there, I've done that. It's going to be a result of the experiences that I've had as a landlord. And that statement is, now that I've prefaced it, that statement is, I don't want tenants. And I tell that and I preach that to our partners, our investment partners, that we don't necessarily want tenants. And the reason being is because in my experience, the tenants that we've had in the past, some have been excellent. They've been stellar. They've been great. And some have been so terrible that it makes you not want to invest in real estate anymore. But we've had a mixture, and that mixture, it's not the highs and it's not the lows. It's not the best and it's not the worst that I'm looking at. It's the in between, the average of all of those experiences together leads me to the conclusion that I don't want tenants, and I don't want our partners to want tenants. And here's why. We don't want tenants. I just want to be clear about that, because that's probably going to contradict what you've heard in a lot of other places. But I'll explain why. I don't want tenants because I want people that are occupying our properties that actually want to live in the property forever. So I'm going to say our occupants, because that's what they are. I want our occupants to love the property. Generally, when people love something, they tend to take care of it, or better care of it than they do things that they don't have a vested interest in, or things that they don't love. So simply put, I want our occupants to love the property. I want them to feel good about the property, and feeling good doesn't mean having a nice, clean property to come home to every single day, or in a lot of cases, a nice, clean property to mess up and leave for someone else to fix after you've decided to go find another pretty nice property to mess up. But really what I'm referring to is the pride of ownership. I wrote the word tenant buyer originally, but I'm going to change that to occupants. And the reason I want to change it to occupants is because these people are occupying our property, but they are occupying with the intent to purchase the property. And here's what it does. There are a couple of different benefits to adapting this strategy of real estate investing. And I'm going to go slow here. Occupants, when they occupy a property, they understand that they don't own the property yet, but they are working towards owning the property. Now, the benefit to them, let's talk about the benefits to the occupant. The benefits to the occupants, and occupants, again, we're just using in place of the word tenant buyers, right? Now we've changed their identity to something else that really more appropriately identifies who they are to us. They are our occupants. And the reason there are occupants is because they occupy the property with the promise that one day, if they hold up to their end of the agreement, they will own the property. So this is very commonly referred to, and you might have heard me say the term just a few minutes ago, rent to own. And a lot of people understand what that is. A lot of other people know it as lease optioning, also as they are leasing it at any given time as specified in the lease agreement. But they don't necessarily have to. They don't necessarily lock themselves into an agreement to purchase the property. But 9 times out of 10, they do purchase the property. And here's why. And this goes towards the subject matter of the benefits for the occupants. The benefit is they want the property, they desire to live in the property and own the property, but they don't have the money to purchase the property. We do, as real estate investors, as landlords, as partners in this endeavor, in this investment, what we do is we make it easy and affordable for them to occupy the property. And we set up terms for them to abide by so that one day after they've completed the terms, the program that we set up, then they will actually own the property. It's no different from when you buy a house and you live in the house, you raise a family in that house, you take out a loan from a bank. And it's the same exact thing with these guys, except instead of going to a bank for a loan to buy the property, they come to us and we act as the bank to give them a loan to purchase our property. And the reason why they didn't go to the bank, and this has to do with the benefits again. So occupants, and we're going to talk about the benefits. And we just mentioned one. So let me write that down, make sure that that's crystal clear. I'm going to move that over. So benefit number one, they can buy later. Okay. Now you're probably thinking, why is that a benefit? Buy later. Well, because usually the way that a buying scenario works, and think again of your home that you bought, you buy now and then you live in the property after you buy. Well, with our occupants, they buy later, but they occupy now. And that's benefit number one. They get to occupy the property right now, but they buy later, right? And so now they are not hamstrung by bad credit. And that's the reason that they come to us to work out a terms agreement. And the reason why they want to work out a terms agreement with us is because they can't work that agreement out with the bank. Why can't they work it out with the bank? Well, first of all, the bank requires a certain credit level, right? And usually when people don't meet that minimum threshold, let's say, for instance, the bank requires that they have a 650 credit score in order to get the loan. The people that are applying for the loan may have a 600, but they don't have the 650, and banks aren't usually flexible enough to say, well, you were close, so we'll give you the loan. Doesn't work like that. They've got their guidelines, and that's going to be the law. The letter of the law is what they go by when they're giving loans to owner occupants to purchase houses. So they've already tried to go to the bank. Our occupants understand that the banks are very rigid in their processes and that it's very hard for us to qualify to get a mortgage, to get a loan from a bank in order to buy a property. So banks are out of the question because they've already tried to get a mortgage and a loan from a bank. It didn't work. So now these people, instead of being able to buy a property, they are reserved to the fact that they are lifelong tenants and they will never own a property for themselves until they meet us. And then they realize, wow, I actually have the opportunity to own a very nice house in a very nice neighborhood that I would not have the ability to apply and get approved for a loan to buy the property. But now these owners of the property are telling me that I can still live in the property, even though I can't get a loan to buy the property. You can live here, just make your monthly payments, and we'll structure the agreement based on the terms. There's another vocabulary word I'm just going to write to the side because I said it a few times and I just want to make sure that it's clear. This is not something that we offer as a complimentary service, but this is something that we do as a mode of helping out our occupants and allowing them the opportunity to own their own home. And that goes over well with our occupants because, again, we said that the first benefit for them is that they can occupy the property right now and don't have to worry about buying the property until later. How much later? Well, depends on what we specify in the terms. And that later actually comes sooner for us if that occupant has a better credit score, if they are more bankable right now than someone else that is wanting to stay in the property but maybe does not have the credit or the income to justify their being able to stay in the property. So we do look at the background of our occupants. We want to make sure that they have income. We want to make sure that they have credit or at least some form of credit that can be cleaned up. We want to make sure that they have a good history. We don't want people that have been involved in different types of issues that are red flags for us. What are issues that are red flags for us? Well, if they've ever been evicted before, especially the last place that they left in right before they came to apply for our property. I mean, those are the kind of things that we as an organization really look out for. And that's called due diligence. We want to make sure not only do we perform due diligence on the property to make sure that the property is safe and reliable and it is deemed to be fit for occupancy, but we also do background checks and we perform due diligence on our occupants. Just like we do with the properties, we do the same for our occupants. They both go through a rigorous check to make sure that we understand exactly what we're working with and what the expectations are going to be for that transaction. So if they have passed that due diligence, then they move on to occupy the property according to the terms of the agreement that we have set forth. And that's a beautiful thing, again, for our occupants because they can live in the house now, but they can buy later. So that's great for them. And that is the biggest benefit and why these people are so eager to work with us, because it's not very often that you have someone that is selling a property and is willing to give the occupant time to pay off the total balance of the property while still living in the property. So that's benefit number one. Let's talk about benefit number two for the occupant. Well, benefit number one, they can occupy now, but they can buy later. Benefit number two is that they still build credit. Now I know what you're thinking. Andrew, I thought you said they've got bad credit. That's why you guys are working with them and cutting them a deal. That's true. But they are not going to always have bad credit. And it's not necessarily even bad. It's just not good enough to get approved for a loan. But part of the benefit of working with us in our program is that if they have less than bankable credit, We report all of their timely payments to us through our servicing company. We report that to the credit agencies. We were talking about just a few minutes ago that we said, if we've got someone that has just below bankable credit, they have decent credit, but it's not good enough to receive a loan, and how they would want to work with us. And eventually they're going to get to the point where their credit gets cleaned up, and then they can go back to the bank, apply for that loan, and cash us out earlier than what we had agreed to in the terms. Well, the reason why their credit gets cleaned up so fast is because, and this is one way that we help our occupants, the reason it gets cleaned up so fast is because we actually take those timely payments that they make every single month, and we report those to Equifax, to Experian, to TransUnion. We report those payments as if they were making payments to the mortgage company. The same way that the mortgage company reports those payments and makes sure that if their payments are late, then they get a ding on their credit. If the payments are timely, then they get an uptick in their credit. We do the exact same thing. And that is golden to our occupants, because it's tough for them to build credit when they live in an apartment or when they're renting a property, because rental payments are not reported to the bureaus, to the credit agencies. So there's really no way for them to build credit based on the property that they lived in. They have to find other ways to build credit. It also, what we do in the property, it adds on, it bolts on to what they are doing on the side to build their credit so that they can build their credit much faster. So what we're doing is we're taking those payments that they make every single month, and we're reporting those payments to the credit agencies, and that's building and increasing the credit scores for these occupants at the same time that we're clearing up other issues on their credit report. So instead of it taking X number of months to clear up their credit, we can slash the time that it takes to clear up their credit, in days, weeks. So it becomes that much more of a benefit to them to work with us, because we can help them get their credit in order a lot faster than if they were doing it on their own. So not only did we give them the opportunity to occupy a very nice property while living in the property and buying the property later at a later date when they're able to qualify for a mortgage, but all of those payments that they're making every single month are being reported to the credit agencies. So they are not only building up their credit so that they can buy this property, qualify for a loan and buy this property. That's great. That's a benefit to us. But really, what we're talking about now is the benefit to the owner occupants or the occupants. They're not owners yet. The tenant buyers are just occupants at this point. But the real benefit here is that in addition to buying the property because their credit is good enough for them to get a loan, after they buy the property, they are set. Because at that point, now all of a sudden their credit is built up above and beyond where it was when we first met them. So instead of being here, they're now right here. And now they own the property that they have been living in already. They've already lived in the property. They've already, for all intents and purposes, made the house theirs, because they've already known that they've always known that they will buy the property. So they're already living in the property. Now it's just a matter of getting a loan to officially pull the paperwork in place so that it lines up with their situation. And their situation is they're living there as occupants and they want to own the property. But in addition to owning the property, now all of a sudden they've got good credit to go along with that. Who wouldn't want to own a new house, a house that's new to them? It could be, a new build, but more than likely it's probably going to be a different type of property that we've owned and we've done some repairs and remodels to, and then we've offered it to them at a higher than market rate so that they can have the opportunity to own it outright at some point. But nevertheless, they live in the property, they occupy the property, and then they buy the property at another time when their credit scores look better. And not only that, but their credit is now a lot higher than it was when we first met them. So now they are in a wonderful position to be able to capture the equity that's in that property, and getting a loan for that property and doing whatever else that needs credit or requires good credit to do. Now they've got a solid start to a new life and a new foundation with their family. And so that is the benefit to our owner occupants for working with us in this program. Those are the two biggest reasons. And we've got a lot of reasons that they would want to go this route, but those are the two main selling points. When we're dealing with these owner occupants, remember, a lot of these folks have already tried to go to a bank and the bank said no. So now they understand that if we want a property, we have to work with a flexible seller like us. That's what we do. And that's why we are so sought after by the occupants, because they understand that we're willing to negotiate the terms to make it easy for them to live in the property, but pay for the property later and help them build their credit so that they can have a new, fresh start to life in their new home. All right, so that's it, guys. We want to talk a little bit more, maybe perhaps a little bit later, about what those terms look like. And that's why I wanted to introduce that word in this conversation, because that's going to be very important going forward. So maybe next time we'll talk a little bit about those terms, what that means, how we come up with it, and again, how we structured these deals to make it a win-win for not just us, but for our occupants and our investment partners all at the same time. Because if everybody doesn't win, then we don't want to do the deal. And that is something that I am very serious about. My team is serious about, and we are always very proud of the fact that everybody that does business with us, whether they are buying a property or they're investing in a property, they win. That is the very essence of the Wealth Investors Network. So again, I'm going to sign out now, guys. It's been a plum pleasing pleasure as well as a privilege. Remember, invest in yourself and invest in each other. Till we meet again.